Hi, I'm Adam DeSanctis, and welcome to MBANow. There are many mixed signals in the economy right now. On one hand, we have a very strong job market. On the other, inflation continues to run too high, higher mortgage rates have slowed the housing market, and GDP has now gone negative for 2 consecutive quarters. Here to discuss this and MBA's latest forecast is our chief economist, Mike Fratantoni. Mike, thank you for being with us today.
Thanks for having me, Adam.
So as I mentioned at the onset there, GDP has now gone negative for 2 consecutive quarters. By definition to many, that means that we're in a recession, but it's not so easy to make that call this time right now. Where do you see things?
Yeah, I still think it's going to be tough to categorize this as a recession. As you mentioned, the job market is really as strong as it's been the last 50 years. We saw average job growth in the neighborhood of 400,000 through the first 6 months of 2022. We'll see what happens in July here this Friday. And you couple that, consumers are still spending, businesses are still expanding by many measures. So it's really tough to say that it's shrinking, but that's not to downplay the risk that we're in right now, that because of the Fed's rapid increase in rates, I really think there's a substantial risk that in the next 12 months, we could see a recession.
And you mentioned the Federal Reserve there, through their balance sheet reduction and short-term rate hikes to cool inflation, it's had an impact on mortgage rates. We've seen them, around 6% at times earlier this summer, kind of stabilized a little bit. Where do you see them towards the end of the year?
So we think mortgage rates have likely peaked, and we think they're likely to drift down a bit from here. But really, we're not going to get back to 3% mortgage rates. We think we're going to be in the neighborhood of 5% the next couple of years. And why is that? Well, we're in a tug of war right now. We were talking about the risk of a recession. That's pulling rates down, sort of the more people get worried about a slowdown and the impact of that in the economy. But still, the inflation numbers are coming in very, very high by almost any measure you look at. And while the Fed is still going to keep raising rates, I think they've sort of gone about as fast as they're going to go at a 2.25 level right now for the Fed funds target. That's neutral. And Chair Powell indicated in his last press conference that the next hike is likely to be smaller, maybe 50 basis points, maybe as little as 25. We still think they'll probably get up to 3% by the end of 2022, but I think they're going to move much more cautiously through the remainder of this hiking cycle.
And I know you'll be closely watching mortgage rates. Now switching over to the housing market, I noticed looking at the forecast that in the later on part of the year, we're expecting home sales to be higher than earlier quarters, and purchase originations volume forecast for this year expected to surpass last year's record total. What's behind the optimism?
So I think 2 things. One, as we mentioned, mortgage rates have begun to creep down a bit from their recent peak, and at least by our data, down a full 0.5 percentage point from where they peaked. The other, probably more important factor is that you're beginning to see inventory numbers pick up. And that's been our major complaint these last 2 years, is that there are plenty of buyers out there. Demand is so strong, and they just didn't have enough houses to look at. Now, whether you look at the new home market or the market for existing homes, inventory is getting higher. It's by no means a glut, but it's higher than it used to be. So I think for particularly a first-time buyer, they're not going to be facing bidding wars at every single house the way they did the last couple of years. And homes are not going to go for tens of thousands above list price. It's going to be a more normal market, and I think that may bring some more buyers back in.
Yeah, I think a more balanced housing market will be good all around for everyone in the next couple of years. All right, so I'm going to put you on the spot here. What is the one thing that has surprised you the most so far in 2022?
Well, it has got to be that June FOMC meeting. So we went into that week with an ironclad, clear signal that they were going to raise rates by 50 basis points. And instead, we got a last-minute sort of clarion call out through the press that they were going to instead shock the market and raise it by 75. That may have been warranted given the unbelievable upward movement in inflation that we've seen so far, particularly in the spring. But it really was a difference in operating procedure for the Fed, and I think it really surprised people.
Yeah, and I think that's a great answer. It's always a pleasure to talk to you about the housing market, mortgage market, and the economy. Of course, these next few months will be very interesting, and I know you'll be watching. Thank you for joining us today.
Thanks, Adam.